Welcome back, value investors. We finished the first week of 2024 and stock prices are down. It's something that I expected a significant pullback after a finale to 2023 that saw stock prices really rise. It was really fun to see those stock prices rise. But as commented before, the party must come to an end. It's just natural. Stocks do not go up in a straight line, they usually have pullbacks along the way. And we're seeing this pullback happen. Now, how long is this pullback going to last and how far down is it going to go? That's always tough to tell. But there's always a good market for sectors and stocks that are undervalued. In 2023, some sectors were really left behind. Some stocks were really undesirable to investors. Well, some of those stocks are really attractive and they should do really well in 2024. I'm going to try to point some of those sectors out and talk about some stocks that I think are going to do well in 2024. Before I jump into my analysis, do me a favor and like my video, subscribe to my channel, and please leave a comment. After the first week of trading, the S&P is down 2%. It's not a terrible week, but it's a good solid pullback week. 2% really brings back stocks. Some sectors really were harder hit, closer to 5%, and some sectors really didn't go down much. The Russell 2000, which is the small and mid-cap stock index, went down almost 5%, which is interesting to see. And the NASDAQ was down almost 4%, showing that growth stocks, technology stocks were really pulled back this week. The volatility index went up. It went up substantially, showing that investors were a little more worried and were more inclined to sell. And that's part of why there was a drop in stock prices, is there was more sellers and buyers. Overall, if the index stays relatively flat, the pullback shouldn't last too long. But if we see this index really go up, look out for a 5 to 10% or larger pullback here to begin the 2024 year. Let me talk about sectors and point out which sectors did well and which sectors really fell behind. So first, energy, oil prices went up. So energy did quite well this week. It was the top performing sector just for the week. Utilities, which tend to be a stable sector, when stock prices go down, utilities tend to be okay. Healthcare, this is a sector that I'm really bullish about. I'm very optimistic that healthcare is going to do well in 2024, and it held its value quite well. And some individual names like CVS and Elevance Health really rose this week, which was nice to see. And next one is financials. So financials did really well for the last 4 months of 2023, and they continue to do okay here in 2024. And then the rest of the sectors in the middle did okay, pretty much kind of stayed around where the S&P went. But just to point out, technology did go down. Now, technology did so well last year. If you look at the 1 year for technology, it was up, more than 50%. So it's probably giving up some of those gains. Some of the high flyers were probably giving up some of those gains. Consumer discretionary as well, it went down this week. And that makes sense because, again, consumer discretionary did really well in 2023. It's probably giving up some of those gains. The one that kind of held pretty well is communication services. Now, the reason I point this one out is communication services did great last year, and it was up nearly 50%. So this has Google, Alphabet, Meta, has Disney in it, Netflix. Those are some of the big names in that particular sector, and it really did well for the week. So that's a nice sector that held its value and performed great in 2023. Now, the trick to value investing for me is to find companies that are undervalued. And I'm really digging deep in healthcare to find value because I think that companies were discounted heavily in 2023 in healthcare. So I have a different video on it specifically, but I continue to buy into healthcare companies because I think there's a lot of value there. I've already bought into financials, but I'm continuing to buy a little bit more, especially around PayPal. I'm very optimistic PayPal is going to have a really good rebound year in 2024. And I'm looking in industrials. So industrials didn't perform great last year. They performed okay. They were 12 point, almost 12.3% rise last year. So they didn't keep up with the S&P. And I think that industrials are going to rotate to the positive side since the economy is doing okay. So there's just some sectors where I'm looking for value. There's always good companies, no matter what market we're in. And it's a matter of just seeing what is undervalued, underappreciated, and I can get a really good price on it so that I could see really good performance in the next 12 to 24 months. Let me talk about the Magnificent Seven now. They had an interesting week, and since they're primarily technology oriented companies, all of them went down. Let me start with Apple. It went down 6.6%, which is a pretty good drop. And there is a lot of concern, specifically around can the company grow? They also have strong ties to China, and there's geopolitical tension there. So we'll see if Apple can start growing their business here in 2024, or if not. We'll also see, I think, with Apple, it's a sentiment stock for me, my point of view. A lot of people are comfortable with Apple. Warren Buffett's an investor. So there's a lot of comfort for investors in Apple. So I get that. I'm not an investor in Apple. I'm more of a fundamental investor. And I'd rather find a stock that isn't liked, that gives me great value. And then once people start realizing that the fundamentals are great, then I make money. So that's my game. The Apple stock doesn't fit into my criteria. But that's what Apple did for the week in the beginning of 2024. Amazon was similar story. It pulled back about 5%. It did great last year. I think Amazon is going to be a stock that's going to be okay. I don't think they're going to repeat the gain that they saw over the last year. That's just way optimistic. Nvidia, this stock pulled back slightly, about 1.4%. I believe it did the best. It fared the best out of the Magnificent Seven. I'm fairly certain they are not going to repeat the 239% return that they have had over the last year. I think most people would agree that's just unachievable. Now, will they return what the S&P is going to perform at? Maybe, but I think there's a high risk that you can give back, I don't know, 40, 50% of that 230% gain. And that would put you in the negative for 2024. So I'm staying away from NVIDIA. It's just, there was just too much buying in NVIDIA. And I congratulate all the investors that bought NVIDIA before the AI craze. But it's just not a stock that I'm buying into. Tesla pulled back 6.9%, which is uh, expected. I continue to believe that Tesla is a car company. And I think a lot of investors go into it and believing it's a technology company, similar to like NVIDIA. There are just big differences between the two businesses. A car company, I think it was announced that in China, uh, Tesla's going to have to recall all the cars that they sold in China. That's a lot of cars. It's going to be expensive. And that's part of the complexity of being a manufacturer of cars is you're going to have factories and hire people and capital for that factory equipment. And you're going to have complexities in the product. NVIDIA, on the other hand, or let's say a Google or a Meta, they are very technology oriented. Their cost of sale is almost nothing. And their technology, once it leaves their hands, it's pretty much done. You're not going to get a return. You're not going to get much of a cost of selling that product out into the industry. So I think that Tesla is going to continue to be held back and be pulled to a value closer to its rivals in the automotive business, which Tesla is way overpriced if you compare them to other auto companies. The other auto companies also are putting out some cars that are quite impressive. I continue to see Mercedes-Benz and their electric vehicles. They look great. And other car companies look great as well. Well, maybe customers are getting a little tired of the Tesla brand and they liked an electric vehicle from a different manufacturer. We'll see. We'll see how things play out. But I think that Tesla stock is going to have a hard time in 2024. And I wouldn't be surprised if Tesla was down 50% in 2024. Let me talk about Alphabet now. Alphabet was down 2.3% for the week, and it fared a little bit better than a couple of the companies, but it was down a little bit. The company, I'm optimistic they're going to have a good 2024. They have a low price to earnings. This is forward. All my price to earnings are forward price to earnings, expecting this is price to earnings in 2024. And last year they had a very good year, but they didn't have a blockbuster year like an Nvidia or a Tesla. 57% is phenomenal. Can they repeat 57%? I'd be very happy because I'm a big stockholder of Alphabet, but I'm not expecting it. It's going to be a 10 to 20% rise. I think that would be aspirational if they're between 10 and 20%. If they're between 5 and 10% gain for 2024, I think that would probably be my best guess. and they could also end up in the negative after the year. We'll see how the year plays out, but I really like Alphabet. I continue to buy shares in Alphabet because I think they have a very good strategy. They have a very good PE, incredibly profitable, and high cash generating company. Meta fared quite well this week compared to the others. They were down 2%. So I think the only company that did better was Nvidia. And I think that Meta is being recognized as being just a premier company. I mean, they're number one in their particular industry and particular business. And last year they had a record year. But I think last year was a combination of they were so discounted in 2022 that they were just recovering some of that discount that existed in the stock in 2023, and then they gained some. So I think they deserve the 173% increase over 1 year. And I'm optimistic Meta is going to do well this year. A rise of 10 to 20% should be in the cards. They have a good PE of 20.2%. The PE for the S&P is actually much higher, around 26. So both Alphabet and Meta have a PE that's lower than the S&P. Microsoft was down 2.2% for the week and to begin the year. They had a very good year last year. And I think Microsoft was probably in the headlines most out of the Magnificent Seven because they really did harness the AI narrative and really wrap it around their company. We'll see how much of that lasts in 2024. We'll see if their Copilot product really works or if it's just kind of a gimmick. I'm going to really focus on their top line revenue. If top line revenue grows for Microsoft, they're going to be fine. Their stock might even rise some. But if their top line revenue is not growing, you can bet that they're going to be continuing to ride the AI horse, which is, oh man, we're going to do all these great things with AI. Well, you got to show me top line growth in order for me to believe that that strategy is working. And the reason for it is big companies like Microsoft, they have so many different products that no matter the quarter, they could always say, hey, our growth in AI was driven by this or that or the other, because they can relabel certain transaction types. They can relabel a category of sales that maybe 2 years ago is just like Microsoft Excel. Well, this year they're calling it, hey, those were Copilot sales. It could happen. And I think if you focus on the top line growth, it really is the acid test to see if the company truly is growing. So all these companies listed here, it's all about top line growth. It's about top line growth and then how much cash they're generating. If they continue to grow their free cash flow generation and they're growing the top line, I'm a buyer. The economy is doing well. We had an employment report yesterday where it showed that we created more jobs in our economy than was expected. Now, if you create jobs and the consumer is buying, which is the fact that consumers are spending, travel is off the charts as an example, then the economy is not in contraction. The economy is actually continuing to expand, maybe not at a fast rate, but it's expanding. So are we going to have a recession in 2024? And are we expecting it in 2025? Well, right now, my best guess is that the chances of having no recession, meaning no landing, are growing. And the employment report yesterday is evidence that I'm looking at saying, hey, at this point, I could see certain sectors are going to begin to grow, and that's going to fuel growth for the economy as a whole. And if you think about, as an example of travel is off the charts. There are so many travelers, and a lot of that is the consumer taking leisure travel. Now, the business traveler hasn't returned to business travel yet. Well, when that happens, you're going to see a lot of economic activity in travel, hotel stays, just in general. It's going to be another boost or tailwind for the economy. So that's one, micro example. I think there's other examples too, especially materials and industrials, where you're going to see the economy begin to pick up because those particular sectors and industries have been in what I would call is a recession within their industries. Well, I think that's going to fuel some growth, and the opportunity for no landing, it really grows. So we'll see what happens, but I think most people agree that it's either going to be a very light recession or no recession at all. Interest rates began to rise really at the end of 2023, and they continue to rise in 2024. That rise, I believe, is happening because if there isn't going to be a recession or it's going to be very light, then the expectation that the Federal Reserve is going to have to bring down rates in order to stimulate the economy is the chances of that are lower. So interest rates are rising. Are they going to rise a whole lot? I don't think they're going to rise to the level that they rose in 2023. I think they may rise a little bit more and probably stay around that level for the next quarter or two. And then once we get to the midway point of 2024, we'll see where they're going to head. But I'm not seeing a drastic change in interest rates, especially like the drastic changes we saw in early 2023 and 2022. Interest rates really affect where I'm putting capital. For example, I've been really increasing the amount of bonds that I own because we are at a good level of interest rates. I'm buying bonds that pay 5 to 8% yield. That's a great yield, especially on quality companies. A 5% return is pretty darn solid. In some riskier bonds, I'm being paid up to 11% yield. And I don't think the risk is that high. So it's becoming a more attractive investment class, especially in 2024, where, hey, we had a great 2023. Let me take some of those gains and lock them in for a nice 5 to 10% return in 2024 and really continue to grow my portfolio by balancing into an asset class that has far less risk than stocks. The other reason interest rates are really important is, as you saw interest rates really drop in 2023, and they dropped very quickly. You saw higher risk stocks, these growth stocks, biotech stocks, technology stocks rise in value. And that's because the discount rate used on those stocks and the expectation of interest rates in the coming years goes down, then it makes those stocks more valuable. So if interest rates can stay around this level, I think we're going to see the small caps, especially those really high growth stocks, continue to do well. If we see interest rates rise very quickly, mid cap, small cap, growth stocks are going to be discounted. So that's just a reality that the discount rate goes up with interest rates. So that's why I really look at interest rates and try to understand what's going on and what's going to happen with interest rates. What am I buying and what am I selling? Let me go through that. So first, I'm selling bonds, and really I'm redeeming bonds. I had bought bonds that had a maturity date in 2024, and I have a pretty large set of bonds that are going to be redeeming. So that's going to generate a lot of cash. Now, what I'm going to do with that cash, I'm certainly going to buy some bonds, but I'm also going to have that cash available to buy some stocks. I'm going to be really trimming back mega cap stocks. I think mega cap stocks had a great 2023 year, but I think it's an opportunity to grab some of that capital and put it into small mid cap stocks and stocks that I think are going to do really well in 2024. And just sell shares in some big winners. My portfolio management is, when you have a winner, lock in some of that win. For example, Coinbase, it's tripled in value for me, which is phenomenal. I'd like to take some of that gain and just bank it and just put it away. Another stock that's really taken off for me is Zim, and there might be a short squeeze on Zim. I'm up more than 50% in a matter of 2 months. If it continues to go, if it hits 100% gain in 3-4 months, I'm going to take some of that gain. So that's an example of just looking at some of these big winners and then banking some of that win. What am I going to buy? Small and mid cap stocks tend to be my choice. I have some really good big cap stocks. I have a solid foundation that includes Meta, Chevron, Alphabet. So those stocks are going to stay for the most part, maybe trim back a little bit of those too. But I think where I can really outperform the market and have a very good return is with small and medium cap stocks. Now let's talk about sectors. So I've talked about healthcare. That's probably most of my energy has been spent on healthcare. I've entered positions, and you can study my videos to see which stocks I'm very favorable on. But healthcare is going to continue to be where I put a lot of capital to use. That's probably going to be my number one sector where I deploy capital. Financials, I'm ahead of the curve. Financials have been doing well for 4 months, and I was doing a lot of investing in financials 5 months ago, and I'm doing really well for my financial stocks. I continue to buy, especially into PayPal and a couple of other financials. One company I'll point out is Allstate. Allstate had a great week. I think investors are beginning to realize that the insurance companies were really beaten down for no reason in 23, and they're going to have a phenomenal 24. And then the last sector is industrials. And part of the reason why I'm looking into industrials is that I have a couple of industrial companies like 3M and some shipping companies. But I'd like to grow that sector of my portfolio just to have good diversification. And I'm looking for a solid position to start and grow. And I'll continue to buy shares in 3M. I think 3M is a high quality company, pays a good dividend, and has had a couple rough years. But I think the most difficult parts that they had to deal with, especially those lawsuits, are behind them. So I think that 3M is going to do well going forward. So those are the three sectors that I'm putting a lot of energy into, and I'm putting a lot of capital to work in. Now, a pullback week is not fun, but it actually could be really productive. It really reminds me that, hey, I have to really think hard and weigh my options in where I want to invest. And I'm glad that I have a lot of free cash ready to deploy, especially as I see some stocks that I think are already undervalued be further discounted. I'm also going into sectors that I think are going to do really well in 2024. So when I see stock prices go down, it's a bit of good news mixed in all of it. I know which stocks I really want to own. And as they get further discounted, that's good news for me. I buy more shares. Overall, it's not as fun as seeing the market really rise for 8 consecutive weeks as it did at the end of 2023. It was really fun to see some of those stocks that I knew were undervalued really take off, especially around financials. That sector just did great in those 8 weeks. But you got to take the good times and you got to take the bad times and really find where the investments are best. And every market will offer up stocks that are discounted opportunities. We as value investors need to understand what's going on with the economy, what's going on with sectors, industries, and companies, analyze those companies based on the metrics and the fundamentals that those companies have, value them under a process that we believe in, and then make decisions. 2023 was a great year, and I'm trying to make 2024 a great year as well. So far, so good. My my income portfolio actually did well this week. It's in the positive. My income portfolio is made up of more Dow-based companies that pay dividends, and that's not a big surprise. Those companies did well this week, as opposed to my growth portfolio went down in value, as the technology sector went down, as well as some of those Magnificent Seven stocks went down. My growth portfolio also went down. So it's always an interesting time. And again, there's always an opportunity to find stocks that are undervalued and can really reward me as a value investor. Thanks again for watching. And I really appreciate all the people who provide comments. I read them all. And some of the comments are just darn great insight. So please keep them coming. Would love to read all your comments. And subscribe to my channel if you like content like this. Overall, for 2024, my objective is to have a great return. And my objective with the channel is to just share my journey and share my ups and downs, share my logic. I'll share my wins and I'll share my losses with the intent of just helping individual investors like myself just have one more reference point of what I'm doing and see how that helps you make decisions for your investments so that hopefully you have a great return in 2024. Thanks again for watching.